Investment Leaders panel. And we've got a fantastic lineup of panelists to talk us through this panel. We have Cailey Barker, who is Director of Natural Resources at Blackrock. Cailey, if you join the stage. Bert Koth, who is Portfolio Manager at Denham Capital. We have Philip Clegg, who is joining us here on the stage in the nice grey suit there. Grey jacket, Portfolio Manager at Orion Resources Partners. And Morten Lien, who is Director of Investment Banking at Clarksons Securities. So, gentlemen, hello, welcome. It's been a while since I've seen a lot of you. I've been locked up in Hong Kong for the last couple of years, but it's good to be back in London for a one-to-one. The panel we're talking about today is seizing a generational opportunity to finance the energy transition. So Randy talked a little bit about gold markets, but now we're going to be talking about all of those metals and minerals that are so critical for the energy transition. And maybe set the scene, if our panelists can tell us a little bit about their exposure to those energy transition metals. Philip, should we start with you on the end there?
Good morning, everyone. So my name's Philip Clegg. I'm the Portfolio Manager at Orion Resource Partners. Just for those of you that don't know who Orion is, it's an asset manager. We manage about $8 billion, and we're exclusively focused on the mining space. So we, in terms of our style of investment, we provide construction capital to companies that wish to build assets or expand their existing assets. And we also do M&A capital, so buyout situations. So financing companies and management teams that wish to go acquire something that's typically producing. And I'd say over the last sort of 4 to 5 years, I've been running our strategy as it pertains to energy transition metals, so all the critical minerals that we need for decarbonisation and for sustainability, really. And in terms of the exposure and the strategy that we've had, actually we felt that there are certain target minerals that we really, really love, and we've always been in copper, for example, and there are other minerals like nickel and rare earths that we really love. But actually the approach has been somewhat of a diversified approach. So we've tried to get exposure to each of the commodities that we feel will have to play a role in what is, as Charlie said, a generational opportunity. The style of which we invest is big financing packages. So we effectively tailor financing packages to the counterpart, and it can comprise basically anything in the cap structure. It's like a bit of a menu. So you can have some senior debt, you can have some product-linked instruments, some streams and royalties and offtakes, and maybe prepays, and there's equity as well. And in the round across our portfolios, you'll see that each of those components is about a third each. But it doesn't mean to say you have to take every single one of those bits of the structure. In fact, we tailor a comprehensive financing solution. And the thing that perhaps we've been running with most strongly and perhaps our most successful strategy has been streaming. And so the thing I've been doing, like as spearheading that strategy, is to build a portfolio of streams and royalties in the energy transition.
Fantastic. Cailey, Blackrock, Natural Resources. Obviously, you cover a wide range of commodities, and I guess with the recent sort of energy shock and the Ukraine war, your energy division has done pretty well. But in terms of energy transition minerals, where are you placed?
I'm working. Yep. Thanks, Leo. We did. I mean, yeah. In short, we pretty much do everything. So all commodities. Our book of business is very broad now. We do a lot of thematic products as well. So nutrition, circular economy, electric vehicles, sustainable energy, as well as our traditional books of business as energy and mining. I mean, commodity-wise, we've always done the usual suite. Obviously, thermal coal is tricky these days, as most of you know. That's sort of one area we can't touch too hard on. But most of the other commodities we look at, we got into lithium and most of the battery materials about 7 years ago, thinking this has got 3 years to run, and that's probably it. And here we are, still in it, in and out of it, and still scratching our heads a little bit in awe. So I think we continue to play in those sort of commodities. It's very difficult. We mostly do equities. We do a little bit of debt, a little bit of private but it's quite difficult to get some of the more speciality metals just simply by virtue of availability. There isn't much equity exposure you can get to pure commodity plays in the battery speciality metals area. But beyond that, like copper, like lithium, like nickel.
I mean, some of the bigger funds. I mean, is that an issue going forward? That the money that is required for some of these more specialist metals to get developed, for the projects to get developed, that's not going to be coming from some of the bigger funds. We're going to have to need some more sort of smaller niche funds to finance those things.
Yeah, I think that's right. Well, it'll be all kinds of pools of capital, including strategic investments from the mining industry itself, simply because you've got to be quite nimble and flexible to those kind of investments, and it's not so easy.
Absolutely. But where are you placed in this space?
Well, first of all, our existing exposure is we are very heavily invested in rare earth, copper, tin, and also, that sounds like an oxymoron, low CO2 metallurgical coal that actually helps steel mills reduce the CO2 footprint in the blast furnace. We don't have a special focus on energy transition, right? But I would say like 40-50% of the portfolio, we try to kind of have metals that have the tailwinds of the energy transition, right? So we invest in those because we feel that several years down the track, there's probably going to be elevated prices compared to today because we don't see where the supply is going to come from, right? But that does not translate into an exclusive focus to focus on those metals and minerals. Now, what you mentioned before, Leo, with these more esoteric metals, I actually think the biggest investment obstacle here is the complexity and the technological risk, making all of that happen, because a lot of the battery metal projects that you see out there today in the market actually have some novel processing technologies that have never been properly commercialized, et cetera, et cetera. So this is actually all really complicated stuff. And a lot of it is actually more especially chemicals business than a metals and mining business. I would say this is actually the single biggest investment obstacle out there. I mean, we provide the development financing similar to Orion, but we are more focused on the equity and the preferred equity side, not so much on the debt side, right? And then you have to take a very hard look. What is actually the execution risk of making that happen, right? And when you then actually look, this is a really very complicated specialty chemicals processes. You just have to take a step back and say, is this the job of a mining investor to put the money into some of these things?
Well, we'll get onto that a bit later as to who's going to finance these things. But Mawson, you're coming into this. We've got some investors here. You're coming in from the sort of brokerage side of things. Your clients and the deals that you're doing, how much of it has swung towards energy transition?
First of all, I'm Morten from Clarkson Securities, and the last 6-7 years we have seen a huge interest in battery metals and battery metals related investments. So we focus on the battery metals themselves, like nickel, copper, cobalt, etc. And we have seen a huge interest in these metals these last couple of years. We believe going forward that these will stay strong. We were there for the first push of lithium in 2019, and when the spodumene bottomed out in March, I believe 2020, at around $400 a ton. So, and now it's Pilbara auctions at $7,000 or $8,000 a ton, right? So, it's a huge movement. So, I think going forward that some of these metals like lithium and copper will be very important for us in this energy transition.
Absolutely. We've seen a number of governments around the world, sort of pushing the energy transition agenda, particularly with the sort of decoupling from Chinese-based supply chains. Every country, every region wants its own critical minerals supply chain. How important do our panelists feel government intervention and government support of energy transition metals will be for the industry?
So, I mean, I think if we're talking about the Inflation Reduction Act, I think it is a staggering figure that's going to be invested in the whole value chain, supporting the energy transition. I think it's $437 billion in total. And from that perspective, I think it would be a positive in terms of the demand outlook for the minerals that we require for the energy transition. And the other thing I think is staggering about it is the way it's not just focused on one element of energy transition. It really does pervade not just battery materials, but things like the hydrogen economy, renewable power, battery storage, grid infrastructure, and so on and so forth. So that can only be a positive in terms of the end demand for minerals. But you have to say, how much of that is actually going into raw materials? That is a big question. And there is some, for sure, but there is a tendency, I think, to go more into the technology, a bit more downstream, a bit more refining in the actual mining. And so it still creates a problem. And there is a dichotomy in terms of what the US is trying to do in terms of develop that value chain versus actually permitting mining projects to get the raw materials that you need to fill that value chain. And that's the one snag, I think, with the approach.
Absolutely.
It's not just, it's a dichotomy for not just the government, but everybody, really. Everybody wants the energy transition now. But it's going to take all our efforts to try and get there. Not just governments easing regulations, but mining companies pushing hard, us on the financing side, financing them. We've got an enormous amount of work to do to get what people want, which is turn on a tap and then we'll have lovely clean energy. And it's just going to take a lot of time.
I do think it's helpful that the government invests in the downstream, like, for example, supporting these rare earth separation plants in the US, right? Because the downstream is usually A, capitally intensive, B, it's technically very complex and therefore risky, and C, there's not a lot of money in it, right? But is nevertheless strategically important, right? So, as an investor, I'm personally not keen investing into the downstream at all for the reasons discussed, right? So I think it's very helpful that the US government, for example, like in the case of a rare separation plant, actually helps financing those, right? Because for an investor, again, most of the money is in the upstream.
Yeah, and just to add to what Philip has have said, if you look at the Inflation Reduction Act and you see that you achieved a tax credit in the US of about $7,500, I believe, on a car if the car is assembled in the US and also if the batteries are refined and processed in the US. And this creates a huge incentive for these producers to move to the US. But if you also look at the bipartisan law that now granted about $2.8 billion to, I believe, 21 companies, of which Syrah Technologies, Piedmont Lithium, and Talon Metals were granted a huge amount of money for their refining capacity to move to the US. That kind of what's happening with the mining and what's happening with the upstream, because some of these mines are yet not permitted, right? So it doesn't help to grant the refineries if they have nothing to refine.
And what's the progress being made to sort of awakening governments and people in general about the sort of the shortage of mining projects that are out there? Bert, I know in the past you've often talked about the amount of lithium, for example, we will need to produce all the EVs that we want to produce or the governments hope to produce. But there's this lack of awareness that this lithium needs to come from somewhere.
It's not just the lithium. You look at a very broad basket. You look at copper, lithium, graphite. You just look at the whole thing, right? I personally don't think that with today's state of technology, the raw materials are there to make the energy transition happen as it's forecast, right? Because you look at the expected supply deficits in a very broad basket of metals and minerals, right? Awakening of governance, the permitting gets more and more complicated, right? So, from that point of view, you take a look at the copper supply stack for the future, right? Only 20% of the whole project pipeline for the next 20 years that it's known today in copper comes from projects that are high grade, of scale, in less risky countries. So 80% of the global copper pipeline is either subscale, right? Subscale I personally define as less than 60,000 tons a year, right? Or it's low grade I define as less than 0.6% a year, or from really risky countries like the Philippines, right? So there's hardly, for example, a copper supply stack out there that meets the normal requirements of commercialization that is in kind of halfway safe jurisdictions, and that's just one of many, many examples, right? So honestly, it's really difficult to see where a lot of those metals and minerals are going to come from.
Yeah, no, actually, it's not just on the supply side, as Bert eloquently put it. You know, the demand side too. You look at a standard gas turbine, 100 megawatt gas turbine. To replace that, you need 20 wind turbines to do it, and that's like 10 times the amount of copper, 10 times the amount of concrete, etc., etc. So, and God knows how, let alone the land and the regulations to permit all that. So the challenge is enormous, and I think it's just a process of education, like anything. And it's all our jobs to try and educate as many people as possible that this is the challenge we're all faced with.
Yeah, I mean, who's going to do that education, though? Because if the mining industry, and they do, put out adverts, like you see a BHP advert and they talk about copper and, you know, the energy transition, but people watching those adverts probably go, well, they would say that, wouldn't they? But what, you know, does government have a role here to get out there and say, actually, we're going to need to do this, we're going to need more mines, we're going to need more projects up and running?
I think we all do, yeah. And definitely, there is a strategic element to it, which of course is some of the caution that you know, particularly the US wants to protect their own strategic resources. So, and I think that's only going to get worse. So that element has got to play into the advertisement and also the education process.
I mean, but what can the mining industry do in general, do you think, to sort of speed up the development of projects? Because, you know, the mining industry is sort of famously glacial when it comes to turning a discovery into a producing mine. Are there any things that the mining industry could do to get things moving faster?
Having gone through several permitting processes over the last few years, it's really, I don't think it's the mining industry, honestly. I think it's governments needing to streamline the bureaucracy. Because most mining companies, if they're entrepreneurially driven, right, anyway try to move a project forward as fast as they can, right? But also one has to say, again, most mining projects have lots of technical complexities, so you can't rush it. I mean, that's also true, right? But I mean, we've gone through 5-6 year permitting processes in some countries. So, I mean, there's definitely need to streamline the bureaucracy and take a look at the permitting regimes in a number of jurisdictions.
I would just say that the sort of glacial pace does come down to a couple of other points as well. The first one kind of builds on what Bert was saying, which is that when it comes to the energy transition stuff, battery materials, they're inherently difficult, right? They're much harder to mine, more to process than gold and copper, right? They're difficult. And we don't really have the expertise in the Western world. You know, this is dominated in China. And so, of course, it requires more study, it requires more testing, it takes longer as a consequence to get into production, into construction. And then to compound that, the financing of these operations, firstly, the bigger numbers, right? So you've got more to finance. And it's just getting harder and more difficult to get it done. Even though we've got a new super cycle coming, it's around the corner. Actually, you've still got a situation where certain commercial banks are actually retreating from the sector, right? It's getting harder and longer, you know. So this is a massive cargo ship that we've got to turn around.
Yeah, just to add to what Philip said there, I think there are two aspects that are important here. One is that these are technologically very difficult projects to do. Processing lithium, for instance, into lithium hydroxide is a difficult thing to do, and it's much more difficult than processing copper. On the other side, I think another thing that also is delaying these projects are permitting. And I think that the permitting is delaying these projects because the perception of mining is outdated. So a lot of people think that these miners, they can't behave themselves. And that's why also that the permits are extremely strict. And in some countries could last for more than 5 to 10 years to get the permits that you need. And these are delaying very important projects that we need for this energy transition, like, for instance, nickel, cobalt, and copper projects. So I think it's a balance there, and those two aspects combined make the projects very hard to finance, right? Who wants to finance a project that can't be permitted? And when it's actually permitted, the technology risk is huge because it's not that much in production yet, and you haven't been doing it for that many years. So I think it's a bit of both of those sides.
From our panelist point of view, have you seen any new technologies in terms of the sort of the processing or even mining coming through that you think show promise to unlock some of these resources?
Yes, for sure. But as a mining investor, our job is not to take technology risk. We're not a venture capital firm.
Yeah, so we're actually in the process of setting up a VC type fund for exactly this kind of stuff, and there are a couple of opportunities that our founder is invested in PA that have done pretty well, and so that's the genesis of it. But we feel that there is a separate pool of capital that could be directed to that and other technologies to support the sector.
Mm.
Yeah, I mean, we have invested and we are invested in a few technology solutions, but they are tough. We're fortunate we have some expertise on the team to look at these things, but it's like any new technology. The risks are extremely high, rewards are enormous, but the adoption, the whole process to make not just a technology solution work, but also get it adopted. To quote your phrase, Leo, it was glacial as well. So it's going to take a long time. I think they're just going to nibble away at the margin.
So just on that, sort of, I think VC is the right kind of style of investment for something like that. But I do think it plays into the whole sustainability angle as well, because a lot of these technologies are far less greenhouse gas emitting than the traditional smelting technologies that wouldn't. So think about hydromet and that kind of stuff. So it takes a while to get them right, but when you do get them right, it's obviously much better for the planet.
I mean, are things lining up for an amazing super cycle? That's a question. That's not a statement from me. But because everything seems to be, everyone's saying, oh, everything's going slow. On Ranald's slides earlier, he had everything was going down that way. Is it all teeing up for something special?
Yeah, well, I mean, I'm not an economist for sure, but I think that certainly when we speak to our hedge fund, that they part of that hedge fund invest in the derivatives of LME metals, part is in gold, and other precious metals. So they really focus on this, and their view is actually quite simple. And I remember speaking to one of our LPs during LME week, and he just said it's like this: next year's a recession year. The Fed will put the brakes on. And you've got this, again, dichotomy between the macro and the micro. Inventory still low, even though we're in this environment. The US dollar will weaken, and then you are into a decade-long super cycle. That's their view from 2025.
Yeah, I'm always hesitant to try and use the words a word that's used in the past that didn't last that long. But I do think we are in a structural shift in commodities. I'm not sure I quite buy into a super cycle, but it's a massive structural shift. We're in an inflationary world. This inflation is probably going to stick around a lot longer than people expect, and the cost of doing this energy transition is going to only add to that. So, cost bases are going to rise. The challenges of getting commodities as part of that transition, I think, will drive this structural shift, and I think that will be around for quite some time.
Mm.
Agree with that. I think the current macroeconomic weakness masks the structural shift that's underway at the moment. And I mean, again, like you, I wouldn't use the word super cycle, because the other thing that one shouldn't forget is that technology, for example, battery technology, is still evolving, right? So it's actually that the metals mix that you have today might not be here to stay. But I think no matter how you look at it, right, in our opinion, there's a structural raw material shortage coming that's severe.
I think Bert has a very good point, but just to add on that, I think that we see that commodities is playing a huge role in the energy transition, and I think it's hard to get away from the demand that will be there, and if that creates a super cycle or not, I don't know, but something is definitely happening, and commodities will be potentially a star in that theater. Hmm.
Bert touched on something there, the sort of evolving battery mix, and this question is often raised. Will we still need the same metals in a few years' time? Anything looking to replace lithium as the sort of one of the key components in batteries going forward that people are seeing?
There's so many evolving battery technologies. Look, I mean, really hard to say. the French working on nanocarbon batteries to reduce the the metal intensity by 60% of a battery. I just don't know, really. But I mean, that is actually a financing obstacle in itself, right? I mean, but I think you mentioned before the commercial banks are retreating from project financing, right? And that's a major thing. The US banks, for example, have all retreated from mining project financing, right? And the reason why project finance banks typically don't underwrite battery metal projects is precisely that, because they just look at that and say, I just don't know how the demand pattern looks like 5, 6, 7, 8 years from now, right? So that uncertainty, how battery technology is actually evolving in the metal requirement, that is actually a significant financing obstacle. And if you look at the so-called offtake agreements, a lot of those companies have in place in reality call options, while the company has the obligation to supply, but the buyer does not have the obligation to buy. And again, the reason is because a lot of the buyers themselves don't know how the metal requirements are going to look like a decade from now.
I think Bert's right. There are many evolving technologies, and you hear about them sort of continuously. You know, the sodium, I think, is probably one that's relatively advanced. And, you know, the iron-based technologies as well, which are cheap. But there are also established technologies like vanadium redox batteries, which, you know, are more costly up front, but in the longer term, a better way to go for stationary storage. The interesting thing I think about in terms of the demand profile is it's not just about electric vehicles, it's about stationary storage as well. And Benchmark Minerals came out with a piece, I think about a couple of weeks ago, and it was just saying that actually, in the longer term, it's about stationary storage. So we are going to need all the technologies we can find, because clearly there's going to be a problem in terms of mining and processing all the lithium that we need.
I mean, maybe there's some education also needed by the project finance bankers, for the project finance bankers, about how long it takes for these evolving technologies to become commercialized. And also the fact that companies have put billions of dollars into these gigafactories all around the world. And they're not just about to strip out all the equipment and put in a new technology overnight. So we've still got some way to go. Do we have any questions from the audience at this stage of the proceedings? Andrew, good to see you. Can we get a microphone? He doesn't need a microphone, but just for the recording, because I think this is being recorded, so for posterity.
Worth storing for posterity. I strongly urge all of you, if you can get hold of a really important piece of research, and I'm not here to praise Goldman Sachs, although I might. Jeff Curry, who's the head of commodity research at Goldman's and an amazing guy and an amazing analyst, has just written, I think, the most important political and economic and mining and resource-related piece of research anybody's written about 10 years. It's called The Revenge of the Old Economy. And Jeff is not exactly against the idea of commodities doing well, but in this he really takes apart the notion that this energy transition can be achieved. Leaving aside, I mean, you guys are all experts. None of you have a clue how this is actually going to be achieved. His focus...
Do you?
No, I'm the first to say I don't, obviously. The reality is none of us have a clue about it. His focus is on the funding of it. This is a $500 trillion bill at a time when we're all out of money anyway, and inflation's 5-10% on top of that 500 trillion. I don't know what the answer is, but lots of things, to quote the excellent Herr Störfli, do not add up. We're wildly out of balance in the realities, and then compounding those realities with our expectations, what's going to happen on a 5-10 year timeline dealing with this transition. I don't know what the answer is. All I just know it's a very, very, very big ask.
So, I mean, the numbers that we kind of have internally is that within this decade, you need approximately $500 billion investment.
500 billion.
Into not trillion. That's several times the size of the world economy, but let's say 500 billion is the number that we use in our own kind of macro thinking internally for the investment in primary mining that is required. Now, within this decade, right? So over the last decade, the mining industry globally raised $150 billion and invested in equity. That's the number over the last decade. So first of all, going forward, you need 3.5 times as much money in this decade in mining primary investment than's been raised and spent over the last decade. Now, then you take a look at what is the percentage of this $150 billion that was actually raised to develop mines. And the shocking truth is it's only about 30%, right? Then of those 30%, how much was actually used for metals and minerals that are not relevant for the energy transition, like, for example, gold or thermal coal, right? So you strip that out, and then you actually get to a pretty low number of development capital that over the last decade has actually been spent to develop mines that are relevant for the energy transition, right? So, and the 500 billion bucks, that is only metals and minerals that are required for the energy transition, right? So if you do this analysis, you'll figure out that probably need 10, 15 times more capital to build mines of relevance for the energy transition within this decade than's been raised and spent over the last decade.
It's not very encouraging for our future possibility. Okay.
How do you balance the fact that the Western world wants clean energy and to drive electric cars, but half of Sub-Saharan Africa doesn't have electrical power yet, and also then you see like growth countries or non-first world countries also wanting more access to energy. And how can they make the jump to clean energy that the Western world wants? Is it economically viable?
Yeah, I mean, is it possible for those countries to do what they did in telecoms, which is to avoid fixed lines and just go straight to mobile, straight to mobile broadband? They can do the same with energy. They don't need power stations, old coal-fired power stations. They can just go straight to wind farms and solar panels. Any thoughts on that? On demand in Africa for renewable energy? I know there are some projects. Yeah.
Well, I mean, yeah, it's hard. You can't really lump. I don't think you can lump Africa as to one country. I think is the danger. There are a lot of African countries which have excellent renewable energy sources. Think of the Inga Dam. Although, the Inga Dam is a great example in the DRC, which is, I can't even remember the numbers off my top of my head, but it's enormous potential. Energy potential to power the whole of Africa. But how long did that take to get into production, to get fully up and running? I'm not sure it is fully up and running, but decades. That's just one example I could think of. Sorry, what was the question again? I lost my track. Yeah, it's a challenge. I think it's a challenge the world over, and some African countries are privileged to have those energy sources. A lot of places, the UK, for example, less so. I can think of one of the Japan, for example. Poor Japan had to close down 20% of its energy mix because it had a nuclear disaster. And it needs that nuclear energy to be part of the transition to cleaner energy. So it sort of caught between a horrible rock and a hard place. So I don't know. I'm not really answering your question, but I don't really have a solution.
Right. It just seems there's a big gap between the Western world wanting clean energy and there's a huge amount of world growth that doesn't have all the energy they want yet, and wants more energy. So it just seems like there's a big gap.
But also a big opportunity for a lot of African countries to benefit from the energy transition because so many of these metals are found there.
For what it's worth, I mean, I believe that uranium will have to be part of that mix. It might take a decade for politicians and society to accept that. It's not going to happen tomorrow, but I don't think it's going to happen without new nuclear reactors.
No, absolutely. Good question.
So just looking on the sort of a 10-year timescale and considering the climate challenge, there seem to be two things that may well happen. One is governments actually take action to price in externalities, in which case, to what extent do you factor in the need to decarbonise investments that you're involved in, so to shift the carbon footprint towards net zero when you're looking at their plans, etc. And if you take the view that actually governments will fail to do that and things are going to get so much worse, what do you do about looking at the extreme weather impact on the robustness of mining operations you've got, either that tailings dams breaking or mines flooding or any of the above, as it were?
Good question.
So, good question. It's very ESG centric, and I would just say that that's something that's extremely important to us as an organisation. And the direction of travel here is only going in one direction, and that is to become more sustainable in the way that we go about making our investments and working with our portfolio companies to make them as green and clean as possible. There are now a huge number of frameworks that one can apply in terms of making those investments, including things like the principles of responsible investing, the global industry standard of tailings management, the IFC performance standards, Equator Principle 4. There are loads of them, and we do adopt that in our framework in terms of the way that we invest. And so through time, it doesn't happen overnight, but with working with our portfolio companies to get them in tune with those frameworks, they become more green. So that's the way we handle it.
The number from Goldman Sachs on the European energy transition, admittedly over the next 2.5 decades, is $11 trillion of capex. And extrapolating that out into the US and the rest of the world, you get to a number somewhere between 30 and 50 trillion.
Is that the number that I was? Is that the total?
The specific for mining, yeah.
Yeah, okay.
I'm talking about an economy system, social wide, that we're going to spend, halve it, $20 trillion on this.
I referred only to mining to development.
I get that,
capital.
absolutely, and I totally get that. That's totally doable. Mining isn't the problem, by the way, in case we don't know that in this room.
Excellent. Yeah, and following up on what Andrew said, Jeff Curry, he does some very good research, including a very good piece about how the energy transition, a lot of governments are seeing opportunities for levelling up within the energy transition. So I don't know if our panellists have any thoughts on that. Bringing the jobs back from China, back to the home country, back to the domestic, jobs for the boys, opportunities domestically from the energy transition to level up those areas.
I do think it's very risky in terms of the policy of deglobalization, particularly in the Inflation Reduction Act. It is risky. I mean, imagine if the EU do something like the same. That is a big problem because circa 80% of the world's batteries are manufactured right now in China.
But that needs to change, I guess.
But can it change in the next 3 years?
Yeah, it's all equals cost, doesn't it? Really, at the end of the day, and I'm probably as sceptical as you, Phil. But I do. On the other hand, I do think that 20 years ago, maybe 30 years ago, God, lost catching my joke. We wouldn't have been walking around with £1,000 mobile phone in our pocket, but we all are. So I think the costs are coming, but I think we're going to wear it.
We probably need a bit more cooperation across the world, don't we? We've got a lot of sort of conflicts and things going on, but we're going to need to make friends with China again going forward. On that subject, the war in Ukraine, obviously, the number one news item for this year and massive impact on energy supplies. What has that done to the world and government's willingness to support the energy transition versus trying to find new oil and gas projects, trying to develop new oil and gas projects? There was a little, at the beginning, I guess, a lot of governments were saying, we need to develop more oil and gas projects, but are they now backpedaling on that and doubling down on renewables? How are you seeing that play out?
I mean, it certainly accelerates the energy transition, right? But what I really want to say about the Russia-Ukraine war is there's a lot of metals and minerals that Russia provides, right, that at least Western markets seek to replace, right? Like Russia, Belarus is 1/3 of global potash supply, 17% of global metallurgical coal supply, the world's largest supplier of titanium alloys, etc., etc., etc. Right? So there is actually a lot of other knock-on effects, and I think the Russia-Ukraine war has not only accelerated the energy transition, but it's also accelerated the decoupling that you mentioned before, right? Where at least in strategic industries, governments and large corporations take a look at the supply chains and say, we can't have critical supply chains in countries that are potentially ideological competitors anymore. So I think the decoupling process is gonna accelerate rather than anything else, as with the energy transition.
I agree with all of that. It's a really interesting marketplace right now in certain commodities that Bert mentioned, some really interesting opportunities as a consequence. But there's a kind of a resetting of the global economy that's now taking place. The unfortunate thing about the war, of course, is that you're right. In the short term, we're having to burn more coal. Right, look at what's happening in Germany right now, for example. And there is also an effect in oil as well.
So, another question here.
Hi there. I'd like to hear your thoughts on nuclear energy. I know that you've mentioned a little bit on nuclear, and it seems to be like everyone wants to invest in nuclear capacity, but not so much in uranium mining. It would be just helpful to hear your thoughts on that.
I agree with Bert. You know, it's got to be part of the transition. We're going to need it as part of the solution. I think if I again look to Japan, which will get back to sort of 20% of its energy mix being from nuclear, the key to that solution really is building in new technology in those reactors that are less risky and having decent safety protocols that they didn't have previously. China's got huge plans. And we do indeed in the UK quite close to home as well. So I don't think it's going away, and I think you're probably right. We need to invest in it, but it's still very politically sensitive. And what do you do if you live in Japan? You know, they've only just allowed the people in Fukushima to go back and start living there again. When was that? That was 10 years ago, something like that. So do you want to live next to a nuclear reactor, or do you want to live next to a thermal power plant? Unfortunately, cake and eat it springs to mind.
Mawson.
Yeah, no. With regards to nuclear energy, we've been looking at it for some time, but we haven't yet financed a uranium project. But I believe that going forward, that nuclear energy has to be part of the energy mix and has to be a bigger part of the energy mix, because as we alluded to in the previous question, with the war in Ukraine, energy security is now very important for all the countries, and you have to look at what kind of energy sources can you actually have that works and gives that base load into the grid that the power system will need, and when the sun is not shining and the wind is not blowing. So I believe that uranium and nuclear energy will be a vital part of that mix going forward. But as he stated too, nobody wants to have a nuclear reactor in their backyard, right? And so I believe it's some sort of balance there, and also the public perception of nuclear energy is they have some way to go there before nuclear energy is, I believe, perceived by the public as something that you actually really can rely on and have to be an essential part of the mix.
Yeah, I agree with all that. I would also just say that the government policy has shifted over the last 12 months or so, right across the world. You know, I think in particular the EU taxonomy and inclusion of nuclear energy, part of that is a big sign of the direction of things to come. And we know if we're going to get to net zero, you can't do it. You just cannot do it without nuclear energy. And so what I would say, though, in terms of the uranium market is that it's starting to look quite interesting. Inventory's coming down, that kind of levels where we had a spike previously. And the demand outlook looks good, particularly in the medium and long term. So I think that for a long-term investor, it's an interesting entry point. And then in terms of where the price is right now, just generally speaking, it's not high enough to incentivize material new supply. So quite an interesting entry point.
You need $70 per pound, essentially, as an incentive price, right? So I think the utilities will have to underwrite that floor pricing to make uranium investment happen.
So in terms of where we're at in the sort of investment cycle and asset prices in general, where are you seeing asset prices at the moment in this stage of the cycle? Cheap, expensive?
Depends. Every situation is different. There's no general answer.
Yeah, I'd say copper's cheap right now compared to where it will be in sort of 3 years' time. I think that is value there. Same on uranium. Look at other commodities. I'd say that lithium looks frothy, but maybe people have been saying that now for 12 months or so. It started to move further north. And so, like Bert says, you just have to look at them individually. I personally like rare earths the most at the moment. I think that we're in a situation in rare earths which is literally on a knife edge. there are certain analysts that know this space really quite well and predict in the medium term that we could get into a situation with the rare earths that we actually need, the magnet rare earths that support electric vehicles and offshore wind turbines and so on and so forth. China, which dominates supply right now, will get to a situation in the medium term where they will no longer export this commodity, and we don't really have a supply outside China. And if you think about the implications on the energy transition of that alone, together with defence, because these things are used in defence, that's a knife edge. And I think that we could see even higher prices in the medium term.
I mean, certainly noticed amongst the in the event world that companies, a lot more companies putting NdPr into their sort of presentation packs these days.
For sure they do, because it is the highest value earth elements.
Absolutely. Any final questions before we wrap things up? Any final questions? Well, final. Let's actually look at the time. 2 minutes to go. In a final 2 minutes, tell us your thoughts on 2023, the year ahead. How's it looking for the mining industry in general, from your portfolio point of view, and energy transition metals in particular? Let's start with Morten.
Okay, I believe that the 2023 will be a very interesting year for these commodities, but I have my hands on. I think copper will perform well. I think lithium is expensive, but as many know, it will stay potentially expensive for the next 10 years, as demand is not, as supply will not be able to deliver. So I think I have my hands on copper next year. I think that could be a small star.
2023 will finance 4 or 5 mines in critical minerals to get into production and do a bit for the energy transition and make some money.
Worried about the macro economy. I think we all are into next year. I think we're all going to be worrying some higher living costs. But I think commodity markets remain tight and in high demand.
Yeah, I think we'll continue to have, it's a recession year, so I think we'll have the macro dominate, but I think on the micro side of things, I think inventories will remain tight, particularly with the energy transition commodities. And with that backdrop, it's really difficult to predict what will happen.
But looking at everything, I mean, one thing that was noticeable from Rani's slides is, the market goes up and down like that. And every time the market goes down, everyone seems to sort of think that it's the end of days. And everyone is very gloomy about everything. But it always comes back. Is there anything that's suggesting that we're not going to have a rebound?
It's the question of timing, right? I mean, I think there's a risk of a 2-year recession, right? I think the negative geopolitical trajectory is all of that, right? But in my opinion, at least, all of this is just masking the fact there's a structural shift in commodity markets. So we certainly think it's the right thing to do in the current situation, actually, to deploy capital into developing mines. Despite the fact that it's an inflationary cycle, it's become more expensive to build those mines, but it just has to be done. The energy transition is not going to happen without a massive ramp up in metals and mining investment.
That's probably a great place to end. Please follow Bert's advice and stick your money into new mining developments. But thank you very much.